What do we mean when we talk about a buyer's market, seller's market, or balanced market? And we use a ratio, and that's called the sales to active listings ratio. We look at how many active listings are in the market. That means how many people have listed their home for sale. And then we look at, in a month's time, how many sales actually happened, how many people purchased any of those homes. Sales divided by active listings will give us a percentage. A balanced market is a range of 12 to 20%. When you're in a seller's market, you're sitting anything above 20%. During COVID, in the height of COVID, it actually got to a sales to active listings ratio of almost 40%. Let's take an easy example. So let's say that in May, you had 3,000 listings come to market. And in May, 1,000 of those 3,000 listings were sold. That would mean that you have a sales to active listings ratio of 33%. And that's a pretty high number. No new listings came onto the market. And in the second month after that, you had another 1,000 listings purchased. Of the 3,000 you started with 2 months ago, you now only have 1,000 remaining, because in 1 month's time, 1,000 were purchased. In the next month's time, 1,000 were purchased. And then let's say that trend moves onwards. By the third month, you have no supply in the market. But it does give us a good indication on where to position yourself if you are a seller and if you are a buyer. Now, if you're in a buyer's market, that means if you have 10,000 listings on the market and only 1,000 are sold, then you're sitting at a 10% sales to active listing ratio, which means there's a excess of supply in the market and allows for buyers to have more negotiation on their end. They can maybe offer a slightly lower price than what's listed. It's just been very interesting to watch over the last 4 years what's happened in the market, going from a crazy seller's market where homes were selling for 30% over the listing price to a couple years later, fast forward, and we're here to this day, there is enough supply and enough demand, allowing for very fair negotiations. It's actually probably one of the better times to be purchasing a home. Yes, we have higher interest rates, but maybe you're only locked into a 3-year fix, which means for 3 years, you kind of got to tough it out. If you can afford it, you're going to get a very fairly priced home. Whereas once those interest rates drop, if you're sitting on the sidelines, that means many, many other people are also sitting on the sidelines waiting to see those interest rates drop so that they can get in. Now, what happens when everyone starts to get into the market? Well, demand starts exceeding supply, and then that's when you start to go into a seller's market, and that's when all these competing offers start happening again. If you guys have any questions, feel free to reach out.